Good evening. Melbourne mortgage holders are being punished for Australia's sky-high inflation, with the Reserve Bank hiking rates today for the first time in more than 2 years. The RBA board voted unanimously to lift the cash rate by 25 basis points, before warning there could be much more rate pain to come.
The Reserve Bank just reversed course. After 3 rate cuts in 2025, they hiked rates in February 2026. 0.25%, pushing the cash rate to 3.85%. First increase in over 2 years, and it's crushing Australian mortgage holders. Roy Morgan data shows 1,187,000 mortgage holders already at risk of mortgage stress before the hike. That number just jumped. Within days, all 4 major banks passed the full increase through to variable mortgage holders. A $600,000 mortgage just went up $90 per month. Victoria's hit hardest. 18.3% of Victorian mortgage holders classified as extremely at risk. If another hike comes in March, that rises to 20.7%. Premier Jacinta Allan watching families buckle under the pressure, and RBA Deputy Governor Andrew Hauser confirming they'll continue to do whatever is necessary to control inflation, even if it means more rate hikes, more pain, more mortgage stress across Victoria. Allan watches Victoria get crushed. Roy Morgan research reveals mortgage stress varies dramatically by state, Victoria and Tasmania getting destroyed. Before February's hike, 18.3% of Victorian mortgage holders were extremely at risk of mortgage stress. That's 947,000 people nationally in extreme stress, but Victoria's percentage far above national average. If RBA hikes again in March by 0.25% to 4.1%, Victorian mortgage stress jumps to 20.7%. That's a 2.4 percentage point increase. Tasmania worse at 23.2%, but Victoria's raw numbers larger due to population. What does extremely at risk mean? Spending more than 30% of after-tax income on mortgage repayments. Many Victorian families spending 40, 50, even 60% living on knife edge. One unexpected expense away from default. Car breaks down, kid gets sick, washing machine dies, can't afford it, credit card maxed, no savings buffer. Overall mortgage stress sitting at 24.5% of mortgage holders in December 2025. That's 1,187,000 Australians at risk. February hike pushed that to 25.3%. If March brings another hike, hits 27.2%. That's 1,322,000 mortgage holders in stress, 135,000 more families struggling. Victorian Premier Jacinta Allan can't do anything about RBA decisions. Reserve Bank independent, sets monetary policy without government interference, but she's watching Victorian families suffer. Rental crisis already crushing renters. Now mortgage holders getting hammered. Middle-class families who thought they'd made it, bought homes, building equity, suddenly drowning in repayments they can't afford. The family crushed by $400 monthly increase. David and Sarah are late 30s, 2 kids, ages 5 and 7, bought house in Melton in 2021 for $650,000, put down 10% deposit through first home guarantee, borrowed $585,000, locked in fixed rate at 2.1% for 3 years, monthly repayments $2,150, affordable on combined income $140,000. March 2024, fixed rate expired, variable rate 6.5%, repayments jumped to $3,800 monthly. That's an extra $1,650 per month, $19,800 annually. David and Sarah scrambled, cut every expense, no more dinners out, no holidays, no extras for kids, bare minimum, survived barely. Throughout 2025, RBA cut rates 3 times. February, May, August. Rate dropped from 6.5% to 6%. David and Sarah's repayments fell to $3,550 monthly. Still higher than original $2,150, but manageable, they breathed. Maybe worst was over. December 2025. Inflation data released. CPI up 3.8% annually, above RBA's 2 to 3% target. David knew what was coming. Rate hike. For the 3rd of February 2026, RBA hiked 0.25%. Cash rate to 3.85%. Variable rates followed. David's mortgage now 6.25%. Repayments $3,700 monthly. Then economists started warning. March hike likely, maybe another in May. If RBA hikes to 4.1% cash rate, variable rates hit 6.5%. David's repayments back to $3,800. He's spending 32.6% of after-tax income on mortgage. That's mortgage stress threshold. One more hike pushes him over 35%. Extreme stress territory. David and Sarah looking at options. Can't sell. House worth maybe $680,000 now. After agent fees and costs, they'd net $650,000. Still owe $565,000. Would clear mortgage with $85,000 left. Lost their $65,000 deposit. 5 years of equity. Back to square one. Renting again. Can't refinance. Banks assess new applications at higher rates, plus serviceability buffers. David and Sarah wouldn't qualify for new loan at current debt levels. Trapped in existing mortgage. At mercy of RBA decisions. Only option? Suffer. Cut more expenses. Hope David's work gives raise. Hope Sarah's hours increase. Hope kids don't need anything expensive. Hope car doesn't break. Hope nothing goes wrong, because one emergency puts them in arrears, and arrears lead to default. Default leads to foreclosure. Foreclosure means losing everything. 5 reasons RBA hiked despite pain. Reason 1. Inflation surged in second half of 2025. After trending down through early 2025, inflation reversed. December quarter, CPI hit 3.8% annually. Trimmed mean 3.3%, both above RBA's 2 to 3% target. RBA Governor Michelle Bullock stated inflation must return to target, even if painful for mortgage holders. Reason 2. Private demand growing faster than expected. Consumer spending strong, retail sales up, housing market picking up, property prices rising, credit readily available. Previous rate cuts flowed through to economy, boosting demand, but demand outpacing supply, creating price pressures. Reason 3. Labor market remains tight. Unemployment 4.1% in December 2025, below RBA's comfort level. Wage growth accelerating. Businesses struggling to find workers. Bidding up wages. Wage price spiral risk. RBA needs to cool labor market. Rate hikes reduce hiring. Increase unemployment. Slow wage growth. Reason 4. Global economy more resilient than expected. Despite geopolitical uncertainty, global growth strong. Commodity prices elevated. Terms of trade favorable for Australia. External demand supporting Australian economy. Reducing need for stimulatory monetary policy. Reason 5. Financial conditions eased too much in 2025. 3 rate cuts from 4.35% to 3.6%. Housing market re-accelerated. Credit growth increased. Asset prices rising. RBA worried they cut too far too fast. Financial conditions not restrictive enough to control inflation. Need to tighten. Deputy Governor Andrew Hauser confirmed RBA will continue to do whatever is necessary to return inflation to 2 to 3% band. Doesn't matter if mortgage holders suffer. Inflation damages everyone. Better to inflict short-term pain through rate hikes than allow persistent inflation to erode purchasing power long-term. What Allan can't do. Allan can't influence RBA decisions. Reserve Bank Act 1959 guarantees independence. Government cannot direct RBA on monetary policy. RBA board makes decisions based solely on economic data. Inflation, employment, GDP growth, international conditions, political considerations, irrelevant. Federal Treasurer Jim Chalmers acknowledged hike will be difficult news for millions of Australians with a mortgage, but couldn't prevent it, didn't try. Government respects RBA independence, even when decisions hurt politically. What Allan can do, provide state-level relief. Victoria could create mortgage stress relief fund, one-off payments to families in extreme mortgage stress, $2,000 to $5,000 grants, covers few months of payment increases, buys time for families to adjust budgets, better than letting them default. Freeze property rates for mortgage holders in stress. Council rates add $2,000 to $3,000 annually. Freezing rates for 2 years provides breathing room. Councils lose revenue short-term, but prevents foreclosures. Keeps families in homes. Maintains property tax base long-term. Provide energy bill relief. Victoria already does this. Expand it. Larger rebates. Wider eligibility. Energy bills $300 to $400 quarterly. Rebates of $150 to $200, meaningful to families in mortgage stress. Streamline refinancing. Work with banks. Encourage refinancing for distressed borrowers. Maybe state government guarantee programs, similar to first home guarantee but for existing homeowners in stress. Reduces risk for banks, allows refinancing at better rates, but Allan's doing none of this. No state-level mortgage relief, no property rate freezes, standard energy rebates only. Victorian families on their own, facing RBA rate hikes, rising costs, stagnant wages, and Premier offering nothing but sympathy, where this crisis ends. Best case, February hike is last one. Inflation moderates through 2026. RBA holds rates steady. Maybe cuts again late 2026. David and Sarah's $3,700 repayments become new normal. Painful, but sustainable. They adjust, survive. Kids grow up. Eventually mortgage gets paid off. Worst case, RBA hikes in March. Again in May. Cash rate hits 4.5% or higher. Variable rates reach 7%. David's repayments hit $4,000 plus monthly. 38% of after-tax income. Extreme stress. Can't sustain, miss payment. Then another. Bank sends default notice. Foreclosure proceedings begin. House sold. David and Sarah evicted. Lost everything. Back to renting. Credit destroyed. Can't buy again for 7 years. Realistic scenario. One more hike. In March to 4.1%. Then pause. RBA holds through 2026. Inflation slowly declines. By late 2026, cuts resume. Variable rates drift down to 5.5% by mid-2027. David's repayments fall to $3,300, still above original $2,150, but manageable. Family survives. Scarred. Financially stressed, but survives. Multiply David and Sarah by 1,187,000 mortgage holders at risk. That scale of crisis. Over 1 million Australian families living on edge, one rate hike from disaster, and RBA signaling more hikes possible. Chief economist Sarah Hunter warned returning inflation to target will take some time and may require further rate increases. Victorian families who bought homes 2020 to 2022 during ultra-low rates now suffering. Seemed like smart decision then. Interest rates at historic lows. Property prices rising. Get in before priced out forever. They bought, borrowed heavily. Assumed rates would stay low for years. Wrong. Rates surged. Repayments doubled. Now trapped. Can't sell without losses. Can't refinance without qualifying. Can't afford current repayments long term. And Premier Allan offering zero state-level relief. The panic Allan won't admit. RBA hiked rates the 3rd of February 2026, 0.25% to 3.85%. First increase in over 2 years. All 4 major banks passed full increase to variable mortgage holders. $600,000. Mortgage up $90 monthly. Roy Morgan data shows 1,187,000 mortgage holders at risk before hike. Victoria hit hardest, 18.3%, extremely at risk. If March brings another hike to 4.1%, Victorian stress rises to 20.7%. Tasmania worse, at 23.2%. But Victoria's raw numbers larger. David and Sarah in Melton borrowed $585,000 in 2021 at 2.1% fixed. Repayments $2,150. Fixed expired 2024. Variable hit 6.5%. Repayments $3,800. 2,025 cuts brought relief down to $3,550 at 6%. February hike pushed back to $3,700. March hike takes them to $3,800, spending 32.6% of income on mortgage. Extreme stress approaching. This is how RBA's inflation fight became Victorian mortgage holders' nightmare. When inflation surges to 3.8% and central bank prioritizes 2 to 3% target, rate hikes inevitable. When mortgage holders borrowed at 2.1%, assuming rates stay low, rate surge destroys budgets. When repayments jump from $2,150 to $3,800, families can't adjust. And when Premier offers zero state-level relief, while 1.2 million Australians suffer mortgage stress, government has failed them. RBA Deputy Governor confirmed more hikes possible. March likely, maybe May. 1.2 million mortgage holders watching, waiting, hoping. Hit subscribe to see how many families break.